Based on data from the long-running health and retirement study in the University of Michigan, the center estimates that about 70% of people over the age of 65 will eventually need some form of long-term care. And it also estimates that 33% of retirees don't have resources to cover even minimal long-term care needs, and only a fifth could afford a severe long-term care need of 4 years or more. Joining me is Darrick Wilkins with LTCTree.com. So Darrick, the oldest baby boomers are turning 80 this year, and studies show 45% of them have no retirement savings, and a quarter of those who do have less than $100,000 in savings. This sounds like a real crisis.
Yeah, that's the crux of the problem. Is a lot of times people, they'll work 30, 40 years. They'll either accumulate a lot of money where they don't have to worry about it, or they don't accumulate much at all. They don't have to worry about it because they can depend on Medicaid and whatnot. But it's kind of the people in the middle who do have assets that if they need long-term care, it's such a high probability, what are they going to do? Because the cost of care is so high.
So talk about, it varies state to state, but what is the average cost of long-term care?
The average national cost for care is about $100,000 for a nursing home, but long-term care also, a lot of times people think of just nursing homes, but it's also home health care, assisted living facility care. Nursing home is about $100,000 per year. Assisted living's probably $80,000. Home health care, which is what most people want to do, is stay in their own house for as long as possible. That can actually be more expensive than nursing home, just depending on the situation. If somebody needs 24/7 care at $20 an hour, that could be way more than $100,000 a year.
Now, doesn't Medicare cover long-term care at some level?
I get that a lot. A lot of people do assume that, hey, if something happens, Medicare or my health insurance is going to pay for it. But actually, Medicare will pay for a whopping 20 days of care in a nursing home, and that's also if you satisfy their criteria by having a 3-day prior hospital stay. If you have a supplement, it'll get you another 80 days, so a total of 100 days of care in a nursing home. But after that, you're on your own.
So I think it's better to just die, right?
Yeah, yeah, exactly. And that's the problem. A lot of people, it's not fun to think about, imagine themselves in that situation needing care, but it's a reality. Modern medicine, it's a gift, but it's also something that's prolonging people's lives to the point where they might need some care in the last few years of life, and it's expensive.
Can you talk about some of the different solutions available to cover long-term care?
Yeah, there's really 4 types of products that we use to solve the long-term care conundrum. One is called short-term care. That's going to be kind of the most budget-friendly. You pay, it covers maybe 1 to 2 years. Your premium's going to be the lowest of the 4. But it's really just for somebody who doesn't have a whole lot of assets. Maybe they have a decent income so they can pay a premium. Then we have long-term care insurance where you just pay a premium each year, and then that can probably get you, 4 to 5 years. But it's use it or lose it. If you die in your sleep and never use it, it's kind of like your car, your auto insurance. You just paid the premiums all those years. Then you have hybrid long-term care insurance, and that's what that is, as opposed to paying a premium each year for the rest of your life. You can pay it off with a one-time premium. You can pay over 5 years or 10 years, but whatever premium method you choose, it's paid off. And then if you die and never need long-term care, they'll refund all the premiums with a bit of interest to the family, tax-free. The last one is, we call this the long-term care hybrid annuity strategy, where you're kind of self-insuring your long-term care risk with an asset. So you'll position an asset and an annuity company's product, and it'll grow at some type of interest over time. And because the interest rates are so much higher than they were just a few years ago, that Fed funds rate has increased. If you think back a few years ago, you're getting 1% on a CD. Now you're getting 4 or 5%. So it's made these annuity self-insure plays a lot more palatable. So there's even income riders out there that will guarantee you a certain type of income percentage each year, and then that will dovetail into a guaranteed income for the rest of your life. And if you need long-term care, there's some companies that will give you a 100% bonus on that income for 5 years.
Man, I really like that last one.
Yeah, the lifetime, the lifetime income stream, because we hear a lot of times people, they're concerned about a couple things. They're concerned about, what if I need long-term care? What am I going to do? The other one is, what if I live to be 95 and I run out of money? So that's where the self-insure strategy with the annuity comes in because you're hedging your risk, you're self-insuring, you're not paying a premium, but you get a guaranteed lifetime income stream if you need it. And there's also that long-term care component, which will give you the double on the bonus on the long-term care on the income. And then the last component is you're safely growing that chunk of money, protecting against market losses.
That's Darrick Wilkins with LTCtree.com. This is Retirement News Online.